Today I want to talk about how Adam Aron has sold more APE stock, forcing the shorts to buy in and replace their synthetics with actual real shares. I want to talk about how this will eventually lead to margin calls and how Griffin and Citadel securities are preparing for bankruptcy. So stay tuned and let's make some money. Also guys, if you've been around this entire year since this time last year, you'll know that for the last week running up to Christmas, I'm in a very Christmassy mood and have a different Christmas hat every single day. So guys, be sure to tune into every video this week to see which hat I'm wearing next. And now I want to dive straight in with the key information. So, you may have seen that Adam Aron tweeted saying some Wall Streeters play such shameful games with AMC, falsely leaking to the press AMC liquidity fears. Their FUD spreading is not illegal, but is evil and irresponsible. And he said there are challenges ahead still, but we announced today that having apes let us raise $162 million of new cash in the last 90 days. So the first part is where Adam Aron tells us that he is aware of these mainstream media outlets spreading false FUD about AMC. AMC is not having any liquidity issues, and the article posted by Ben Zinger was about AMC X, a completely different company. Adam Aron was obviously made aware of it and tried to go to the SEC about it, but the SEC obviously told him that spreading FUD is not illegal. I think Adam Aron obviously tried to do something about this FUD article, but obviously couldn't as it's not technically illegal. And on top of that, Adam Aron has also raised $162 million of new cash from the sale of APE shares. Now, if you rewind 90 days from today, Monday the 19th of December, you're somewhere around the 19th, 20th or 21st of September. The price on Monday the 19th of September was around $4.67. Right now, AMC is trading at about 67 cents, and that means the average price that these APE shares were sold at is somewhere around $2.67. That means Adam Aron has probably sold somewhere around 70 million shares, but has yet managed to raise well over $162 million. Now, I believe this is a good thing as it forces these shorts to buy in and replace their synthetic shares with actual real APE shares. While it does mean that Adam Aron gave them the opportunity to close out of their FTDs, it also means these shorts exerted buying pressure on the APE stock, buying up these new APE shares. Alternatively, retail investors could have also been buying up these shares, and these shorts would have had to create even more shorts or even more synthetic shares to push the price back down. Either way, the shorts have once again doubled down on their investment by spending money to buy up real shares or by spending more money to short the price back down again. Either way, anytime that Adam Aron sells more APE shares, he is forcing the shorts to commit more of their money and more of their overall portfolio value into their APE short positions. This means that every time Adam Aron is selling shares, he is forcing these shorts to get closer and closer to margin calls, as he's forcing them to use their available margin, buying up more shares or shorting more synthetic shares. I think that every time Adam Aron sells these shares, it brings us one step closer to these shorts being margin called, and it also raises millions of dollars for AMC. This gives AMC the opportunity to pay down those bonds to free AMC from debt, and also generates them tons and tons of cash to go on an acquisitive rampage. This way, Adam Aron can improve the AMC company, he can pay down more debt, and he can buy up more theatre locations, all meanwhile screwing these shorts even more, forcing them to commit more of their portfolios to their AMC short positions. Now, many people have been asking Adam Aron as to why he hasn't been speaking more about these illegal shorts and about the crimes they're committing against AMC. But as Crystal Ball tweeted, he said it's a lot easier to say when you're a pink sheet company, because pink sheet companies aren't subject to the same regulations around securities manipulation laws. He said stop trying to force Adam Aron into doing something that could screw us over and could potentially end up with AMC being delisted. Be patient. This screenshot here says are over-the-counter markets regulated, and it says OTC markets are subject to little if any oversight by regulatory authorities. Therefore, it's significantly easier for CEOs of pink sheet stocks or for CEOs of OTC listed stocks to talk about synthetic and naked shorting specifically. It's much more difficult for Adam Aron to talk on naked shorting because there's so much more regulation, and Adam Aron could end himself and the company in a lot of hot water. But I do indeed believe these margin calls are coming. You may have seen on Friday the S&P 500 again had another bad day. On Friday alone, $878 billion was wiped from the US stock market. On top of that, Moomoo is currently holding their biggest ever giveaway for the Christmas period. Moomoo is currently giving away 23 shares worth up to $2,000 each. And on top of that, they're holding a $60,000 giveaway sweepstake. All you have to do is sign up to Moomoo right now using the link in the description below. That obviously involved many companies like Amazon being down 3% in a single day. Microsoft was also down 3%, Google was down 4.5%, and Apple was nearly down 5% in a single day. On top of that, the majority of the market entirely was red. And as Corey Elliott tweeted, he said $878 billion has been wiped out from the market today. That 20-something% cost to borrow rate is not feeling great for Citadel securities. And that also means that shorts as a whole, or hedge funds as a whole, have $878 billion less to meet their margin requirements. That's $878 billion of margin wiped out in a singular day, and brings many hedge funds closer and closer to a liquidation. You may have also seen the market was again red on Thursday, and so far is again red today on Monday as well. These hedge funds have likely lost multiple trillions of dollars in the last few days or the last week alone. And as Suspended POS tweeted, he said, "Tell me you're screwed without telling me. Ken Griffin is currently moving his multi-million-dollar masterpieces to Florida." He asked why, and he said maybe because there's more bankruptcy protection laws in Florida, and maybe the government and the SEC won't try and seize those art pieces. This article says that billionaire collector Ken Griffin quietly moved his masterpieces from the Art Institute of Chicago to Florida. Now, that's interesting because he moved all of these pieces and tried to keep it on the down low and on the hush hush. But it's also interesting that he's moved his art collection worth over $100 million out of Chicago and down to Florida, where there's more bankruptcy protection laws. If Ken Griffin is going bankrupt, it's very fortunate for him that he's registered hundreds of millions of dollars worth of money into his mum's name, or worth of real estate assets into his mum's name, and he's now moved his art piece collection down to Florida as well. This all obviously seems very aptly timed that Ken Griffin is trying to move as much of his money as he can to the Cayman Islands, and he's trying to store tons of his wealth into assets registered not in his own name, and also hidden down there in Florida. And it's not just Ken Griffin and Citadel Securities that seem to be struggling. The entire of BlackRock is so far down 25% year to date. One of BlackRock's funds, their 2065 Fund F, is down 25.66% year to date. Their 2060 fund is down 25.65%. Their 2055 fund down 25.64%. And many of their other funds, like their 2050 fund, are down 25.5%. Practically the entire of BlackRock right now is down 25% year to date. Some funds are down slightly less, at down 19 or 23%, but the majority of their funds are down a whopping 25%, if not more. That means that right now, as BlackRock is a $10 trillion firm, they've so far lost $2.6, if not $2.5 trillion year to date. Losing $2.5 trillion for a single firm is obviously catastrophic, especially over the last few days where we've seen significant losses in the S&P 500. This number could potentially be closer to $3 trillion. And again, this goes for hedge funds across the board, as $878 billion on Friday alone was wiped from the entire overall market. And on top of that, breaking market news has also tweeted saying House Republicans have demanded that Fed Chairwoman Janet Yellen assesses the swap risks. Now, this again is really interesting because we know there's tons of dollars, trillions, if not quadrillions of dollars tied up in these swap derivatives. We know these swaps are also very risky and are currently wreaking havoc on the financial system. And it seems even the House Republicans are aware of just how damaging these swaps right now currently are, and therefore they've demanded the Fed Chairwoman to assess the true swap risk. When it turns out the US has trillions, if not quadrillions of dollars of exposure to these risky swaps, it wouldn't surprise me if the House Republicans try and move a motion to prevent hedge funds from taking out new swaps and ensure that they close old swap positions. Obviously, if these hedge funds and these shorts have to close out on their AMC swap positions, which they're currently using along with their false locates to generate synthetic shares, it could cause absolute chaos, causing the AMC squeeze. If these hedge funds are forced to close out of their swaps and they're forced to close out their synthetic short positions and buy real AMC and APE shares, it absolutely would cause the squeeze. And it seems the government could potentially be waiting to trigger the squeeze until CBDCs are fully implemented. Froggy Styles tweeted saying that margin calls will no longer be waived upon the implementation of CBDCs. He said you're going to start seeing margin calls shortly after CBDCs are fully set up. CBDCs will likely come with a bank app on your phones, like a debit card. Now, it seems the US government could potentially be very sneaky in terms of ensuring that CBDCs are mass adopted by luring you into adopting it. In China, it said the government of Shenzhen's Fujian district has announced that 15 million yuan or $2.27 million in digital RMB would be distributed to local citizens on Friday, April 29th. So it seems right now that China is trying to ensure their citizens take up and use these CBDCs by offering free money. They're offering, say, $40 per person in digital RMB to ensure that these CBDCs are mass adopted. But I've also seen in China that some of these CBDCs have an expiry date, and therefore if you don't spend your digital RMB, or if you don't spend your money, aka your monthly pay packet, your money could actually end up expiring. This money is also likely to be controlled, where you can only spend this money at certain stores and only spend certain amounts of money in a certain time period. And this could be a way the SEC and the Fed does actually pay out for the squeeze, and they pay you in these CBDCs, but try and control your spending, only allowing you to spend certain amounts of money at certain times in certain locations. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.